Good day, YouTube. This is Jay Money with Falling Forward Financial. Just another dividend video here. I've been trying to do some safer plays in regards to all the red going on up and down in the market, and I'm trying to find some more steady dividend stocks that don't move a whole lot. Some of them still do, but just trying to diversify and get the biggest bang out of the market that we can. So but this is two dividend stocks to buy now, and I don't know, you can let me know if you're a fan of these or not, or if you have these, or if you have two other dividend plays that you like better. So but this article says it's two great companies when investors aren't showing them much love. I don't have either one of these. I've heard about both of these quite a bit. So when it comes to valuation, most investors fall back on things like the price to earnings, PE ratio. Earnings are too variable for me, so I prefer metrics like price to sales ratio. Personal favorite, relative dividend yield. Right now, dividend yields on offer from Hormel or HRL or Clorox CLX are elevated, both worth buying. So we'll see, and you can decide as we go through the article and you watch the video. But again, I don't give tax, legal, or trading advice, just state my opinion on these. So like I said, I do not have either one of these currently. One of them is looking kind of interesting, and I'll tell you at the end. So Hormel has increased its dividend annually for 50 years. That's something to say about it. Making it a dividend king. Over the past decade, its dividend has grown at an annualized clip of 14%, and today its dividend yield is toward the high end of its historical yield range. While the 2.1 yield may sound anemic when looked at it in isolation, it's clearly not the full story. So, and I love this here. So this is what people do in the market. They're either calm or they panic. So that's a pretty awesome picture there. So Hormel is an iconic food maker with brands like Spam. I guess you can list in the comments if you like Spam. Planters, which is peanuts and that sort of thing. Columbus, I'm not too familiar with. Holy Guacamole, among many others. Its flair for innovation has been buying up higher margin products while shifting out of the commodity business, and has a direct selling force in the food service space that gives it a competitive edge. It's also working to expand its reach into the international sphere. There's a lot to like here, and no reason to think the company's business is faltering. Even the near-term performance is pressured. So again, HRL, you can see the drop off. We'll just call it $50. Looks like it went down to about a little bit over, we'll just call it $45.50. Bounced around here in the $45 to $46 range, and then fell below. So a market cap of 24 billion. Days range of 44.42 to 45.57. So a little bit of range in there. 52-week range of 40.48 to 55.11. So about a $15 appreciation there. Investors tend to think in the short term, which is why the impact of inflation is such a concern right now. Hormel, like so many other companies, is facing increased costs for its ingredients, employees, and shipping. It will need to pass those costs on to customers via price increases. So, but there's a time lag inherent to this process, so the margins are likely to be weak for a time, which could extend if there is a recession. Next is Clorox. If I had to buy one of the two, it would be this one. Clorox cleaning business saw a massive spike in demand during the early days of the pandemic. Company ramped up supply to increase customers. Wall Street bid for the stock up the short-sighted frenzy. Given the demand spike, like most such exogenous shocks, wasn't destined to last. Pain came to a head in the fiscal second quarter of 2022 when sales dropped 8% and gross margin contracted a massive 12.4 percentage points Stock understandably plunged when its earnings came out. Today, the stock's yield at 3.3% is toward the high end of its historical range, and the shares are 40% or so below the peak they reached during the early days of the pandemic. This despite the fact that Clorox has a 45-year streak of annual dividend hikes behind it, a 10-year annualized dividend growth rate of 7%. To be fair, the consumer staples giant has some hard work ahead of it as it looks to get its margins back to historical levels given the inflationary backdrop. So, like I said, you can list in the comments if you have either one of these and which is your favorite, or if you have any other dividend play. So you can see what Clorox or CLX has done here in the last month. It looks like it was, we'll just call that about 150, and it's just kind of dropped about $20 or $30 here. So $15 billion market cap, currently at $122.72. Days range of 120.61 to 124.10. The 52-week range of $120.50 to 191.75. So about a $71, $72 play there. Volume of 2.2. So kind of small volume on this one, but this one doesn't move in great jumps, although it did appreciate it, but it doesn't move like Tesla or some other stocks out there, so I'm not going to get too much volume on this one. Most notably, the biggest problem in the company's cleaning business, most of the other products it sells are doing just fine. In fact, the company has already shown signs of improvement in the fiscal third quarter. Notably, the gross margin was off 7.6 percentage points, much better than the previous quarter as price hikes and cost cutting started to take hold. As sales were up 2%, sure, cleaning supplies remain a weak spot, but that's not all shocking given the unusual demand spike during the pandemic. So, all in all, Clorox, more like a company, they got caught in severe and sudden market, even that it won't have the impact on its business. If you can think contrarian, you might want to take a closer look. So, like I said, you can list in the comments if you think Clorox or Hormel is a better play, and if you're being calm or panic in the stock market, you can list that as well, so that'd be interesting to know. I've been trying to buy a little bit here and there, but once I buy, sometimes it goes down again the next day, so I've just been kind of being conservative. So, but you can list in the comments your thoughts and what your good stocks are and making money. So, and if there's any other stocks out there you want me to make a video on, I'd be happy to do that as well. But that's the top two here. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, following Forward Financial. Happy trading, happy investing, stay green. Cheers.